Welcome to the Find Your Edge podcast, where we break down the psychology, strategy, and mindset behind professional trading. In a world where trading strategies are becoming more complex every day, it's easy to get lost in indicators, signals, and opinions. But the truth is, the real edge in trading often comes from something much simpler: understanding the psychology of the market and the psychology of the trader. Today, we're going to talk about how emotions move the Forex market, why mindset matters more than most traders realize, and how you can begin developing the discipline required to trade consistently. If you've spent any time learning about Forex trading, you've probably noticed something quickly. There is a lot of noise. Everyone has a different indicator. Everyone has a different strategy. Everyone claims to have the perfect system. But after years of studying the markets, one thing becomes very clear. The market isn't just numbers on a chart. The market is human behavior on display. Every movement in price is driven by decisions made by traders all around the world. Banks, institutions, hedge funds, and retail traders are all reacting to the same information, but often with very different emotions. And those emotions create the price movements we see every day. Two emotions dominate financial markets more than anything else: fear and greed. Fear causes traders to exit positions quickly, often at the worst possible time. Greed pushes traders to chase trades after the move has already happened. You see this constantly in the markets. A support level breaks, and suddenly traders panic and start selling aggressively. A resistance level breaks, and traders rush in because they're afraid of missing out. These emotional reactions create momentum in the market. Professional traders understand this dynamic and learn how to read market behavior rather than react emotionally to it. But understanding the market's psychology is only half of the equation. The other half is understanding your own psychology. Many traders actually have solid strategies. The problem is not the system. The problem is execution. Traders often close trades too early, move stop losses, or increase risk after a losing trade, not because the strategy told them to, but because their emotions took control. This is why trading psychology is so important. Without discipline and emotional control, even the best strategy will struggle. One of the hardest lessons new traders have to learn is this: losses are part of trading. Even the most experienced traders in the world take losing trades. The difference is how they respond to those losses. Inexperienced traders often react emotionally. They may try to recover the loss quickly by taking another trade immediately. This is often called revenge trading. Professional traders approach losses differently. They understand that trading is a game of probabilities. Not every trade will work. But if the strategy is sound and risk management is controlled, the overall results can still be positive over time. One of the most important skills a trader can develop is patience. The market does not provide high-quality opportunities every hour of the day. Sometimes the best trade is simply waiting. Professional traders often spend more time watching and waiting than actually trading. This patience allows them to focus only on the setups that fit their plan, and that discipline is what separates professional traders from gamblers. Another key factor in trading psychology is risk management. When traders risk too much money on a single trade, emotions become much stronger, fear increases, stress increases, and decision-making becomes worse. Professional traders control this by limiting how much they risk on each trade. By keeping risk small and consistent, traders reduce emotional pressure and make clearer decisions. The Forex market is often presented as a technical challenge: charts, indicators, patterns, and strategies. But in reality, trading is just as much a psychological challenge as it is a technical one. Success comes from learning how to manage risk, control emotions, and remain disciplined even when the market becomes unpredictable. When you understand both market psychology and your own mindset, you begin to see the market differently. And that's where your real trading edge begins. Thanks for listening to the Find Your Edge podcast. If you're serious about improving your trading mindset and learning how professional traders approach the markets, make sure to follow the podcast and explore our other episodes. And remember, the goal is not just to trade the markets. The goal is to find your edge.